Investors, not only did the market completely reverse course over the past week or so, erasing all the recent momentum, but as I was researching, I noticed insiders across the board have been offloading shares of their companies. But more on all of that to come. If you're new here, I'm Ari, a dividend investor here on YouTube with one mission and one mission only. Share the need-to-know economic insights with you all on top of new dividend stock ideas to ultimately help you drive more profits this year and beyond. As for today, all of that and more to enjoy, so how about we dive right in. Wow, I am excited for this one because, well, here we are after a week's worth of a market craze and a false sense of hope that was conspired literally out of nowhere, with plenty of investors saying things like we were in an entry into a bull market, but now here we are, the market's completely reversed course. As for my account, currently sitting at $119,483.47, down, but I want to direct this message to all the haters out there. Because weeks ago they were saying, this guy's hilarious. There's no way of knowing this, and you can't predict the market future. Or my personal favorite, this guy thinks he knows everything. And I want to provide all those haters with some real answers now. 1, I don't know everything. 2, I can't predict the future. And 3, we'll revert back to number 1. But now let's get real as investors. It isn't about knowing everything, nor predicting the future with 100% accuracy all of the time. As an investor, we have a job to empower ourselves. After all, that's what smart money does day in and day out. They look at our economic backdrop and create a thesis to then carry out their action plan to invest in stocks. Sometimes they're wrong, and sometimes they're so right they hit that home run. All of which we do right here. And I just say things from where I stand and how I see it. And heck, yes, when I'm right, I'm gonna say it because the signs are everywhere sometimes. And if you were one of those haters out there dropping the negative comments weeks ago while thinking this is it, only up from here, it's time you check yourself as an investor. Here we are exactly where I said we would be a couple weeks ago. All eyes back on the Federal Reserve as we get hit with what I like to call an economic reality, a wake-up call that we all don't really like to hear. And that reality is that the Fed very well may hike interest rates come the end of September. Now, honestly, I don't really think it's going to matter all that much because interest rates are already sky high. So the fact that the market is running up despite all of our ugly economic backdrop is exactly why I've been able to pretty much successfully, or rather more accurately, proclaim that the market would be rocked with volatility again. While a soft landing is the ideal, history tells me just how insanely challenging that is for the Federal Reserve to actually pull off. Now, even the Federal Reserve Chairman himself, Jerome Powell, alludes to that every single speech.
We don't think smooth, it's probably going to be bumpy. And so we think that we're going to need to do further rate increases, as we said, and we think that we'll need to hold policy at a restrictive level for a period of time.
And if that wasn't a clue in for you, how about the amount of insider trading going on where we have millions of dollars being made by insiders offloading shares? Take Target's executive team, where we find 3.9 million sold, Morgan Stanley's top dogs selling over $43 million worth of shares, or one of the masters of the market over at BlackRock, Larry Fink, selling over $16 million worth. All indicating a storm is on the horizon. And no, that list didn't even stop there, but because you're here for dividend stocks, I'll just say this. Invest cautiously, don't time the market, but get smart and invest wisely. For me, that means into companies that you can essentially buy and hold forever, or at least be invested into with ease, knowing that your money is safe and moreover working for you. As Buffett always says, there's really only 2 rules to investing. Rule number 1, never lose money, and rule number 2, will follow number 1, which all leads me to our very first dividend stock worth your attention right now. Good old American Express, ticker symbol AXP, which is a Buffett stock, by the way, and it's not your industry-leading behemoth Visa, but nonetheless an incredibly powerful leader in the payment card space, and honestly has more of an allure to it, in my opinion, as their credit cards attract the likes of wealthier to-dos when compared to Visa or MasterCard. But regardless, all 3 of these businesses make their money primarily from every single transaction that takes place in this paperless world that we're living in between me and you and all the consumers out there. That's why this company is just a gold find. And while you're walking away with a smile, but squeezed for your ease of use. However, should you fail to pay your credit card balance, you too will be hit in the face with a fee, and with many credit cards, that's just literally the standard annual fee and a lot of money being made from it. So let's talk about a great business model. There you have it. Either way, we can find American Express right now down by about 10% year to date, trading for $156 per share with a PE ratio coming in at 16.2, which is likely because of consumer shifts that are taking place as we speak in our current market conditions. Now, looking ahead, we have plenty of optimism from analysts coming up to a forecasted share price of $183 per share, making for 16.7% worth of upside. But we will all get to enjoy a safe dividend because the American Express payout ratio is coming in at just 22.79%. And a more exciting note here, we have a growth rate popping above 9% with a dividend yield that's coming in at 1.52% until this stock recovers. Before we cover dividend stock number 2, I want to take a moment to get a consensus out there of how you're all liking this type of content. And if you want more videos just like this one, you gotta let me know by tapping on that thumbs up button. Not to mention, in doing so, videos like these will actually then get picked up by the YouTube algorithm, which in turn ultimately helps me reach more dividend investors, and that is my ultimate goal with this YouTube channel. So just one tap on that thumbs up button, and it's a double whammy for us all. With that, let's talk about Lockheed Martin, ticker symbol LMT, which has now been mentioned on my channel quite a few times in the last couple of weeks, meaning you should really listen up. Because when I find myself repeating stocks, well, in my opinion, it's just that this opportunity is growing better and better and bigger for us all. And that's exactly the case with this world-renowned industry-dominating defense contractor as they continue to develop all the defense technology, the vehicles and spacecraft to none other than the United States government and allies around the world. What is more is the fact that right now, Lockheed just took yet another tumble in the market recently, now trading for $425 per share. That's just over 9% down year to date with a PE ratio coming in at 15.5. Now with clients, like I said, the US government constantly upgrading their wartime arsenal, Lockheed finds itself with continuous deals secured, like their most recent $315 million modification deal with the US Navy, or their $2.7 billion mod deal with a total of 97 aircraft to be delivered in 2023 thanks to Uncle Sam's deep pockets. But what I love the most here when it comes to Lockheed is the insiders who have been all over their own stock recently, scoring more shares of the company, while analysts have been very optimistic with 18.7% worth of upside expected, with the Lockheed share price climbing to $505.56 per share, with a safe dividend as Lockheed's payout ratio is coming in at 42.42% after having established their 8.45% 5-year growth rate and a solid 2.83% dividend yield for shareholders. Now, this next one might spook some of you younger investors or those with less experience away because its share price may seem expensive. But when you realize that BlackRock, ticker symbol BLK, is one of the world's largest asset managers with a staggering $8.59 trillion in assets under management, you really got to think about this one. I mean, this is like Berkshire on steroids. But of course, it would not have made the list today if it weren't for its share price sliding rather recently since its July peak of $756 per share to its current share price of around $689 per share with a PE ratio at 20.6. BlackRock is looking better and better. However, do take note that insiders, like I said before, Mr. Larry Fink himself, offloading shares here, which tells us that there may be more pain ahead. But in terms of BlackRock in and of itself, just with an overall economy and the future that it has, I mean, it really is an opportunity for longer term investors as the stock share price continues to slide. And point being, with smart money swooping in here to buy a ton of shares of this money manager, or shall I say the money maker. Now, as for analysts, they're also forecasting about 20% worth of upside with the share price bouncing right back up to over $800 per share at $825. As for the dividend, well, very reliable again here with the 55.37% payout ratio, a beautiful to see 11.78% growth rate, while also being able to then, as a dividend investor, enjoy a 2.88% dividend yield. And if you're feeling like you can't afford such a stock, totally understandable, but Darden Restaurants, ticker symbol DRI, has you covered. Literally, with all the comfort foods that you're gonna need to eat away your anxieties this upcoming economic downturn, as it's a leading restaurant operator in the United States, operating chains like the Olive Garden, Longhorn Steakhouse, Seasons 52, the Capital Grille, and Eddie V's. And get this, it's one heck of an employer with almost 200,000 employees working under their 11 chains, which just goes to say that they aren't some mom and pop shop. Now, I honestly think that Darden flies under the radar amongst all of us dividend investors, but since I've been invested in it during 2020, it has really proven itself well. So I keep bringing it up to your attention as this share price continues to remain battered, about 7.8% down on the year, trading for $150 per share with a PE ratio coming in at 18.6. And if you really think about this, that's all you have to do to save money for this one is just not go out to dinner or order a couple meals in or just learn literally how to cook, save some money, invest into the stock. Because as we experience more market volatility, Darden may slide more, yet it's imperative to recognize that regardless of the state of the market and economic storms that are brewing, people are going to be people. They're going to be spending and probably still going out to restaurants. So we have 17+% worth of upside coming to a share price of $175.94. And as for the dividend insights, well, Darden is coming in with a very doable payout ratio at 60.45% with a 5-year growth rate of 13.35% and a very attractive dividend yield coming in at 3.52%. And last but not least, to play it ultra safe, with a long-term investment, I wanted to head into the healthcare industry and revisit Bristol Myers Squibb, ticker symbol BMY. Now investors, listen up here, because when it comes to a pharmaceutical company like Bristol Myers, you'll want to take full advantage as it's one of the world's largest pharmaceutical companies, consistently ranking one of America's largest companies year over year. Now, as I always say, everyone is always going to look to live longer, healthier, disease-free, and illness-free lives. So, need I explain any more about this? And right now, at a share price of $50 per share with a PE ratio at 16.5, with plenty of hedge funds taking full advantage of this opportunity, all likely for the longer term as their dividend yield is coming in at 3.82%, which is likely to remain safe thanks to their lower payout ratio of 29.57%, yet a higher growth rate of 7.19%. But that's not all here, because when we're going to go look for some upside, we had 18% worth of it, which means that share price could hit $70.91. And there you have it. Now, as for you, let me know what you think of any or all of these investments. If you have them in your portfolio, if you have better ones in mind, comment down below. Now, if you enjoyed this video, zero doubt you are going to love this one right here. But before you actually click away, tap on that thumbs up button and be sure to subscribe to never miss a single video.